Wholesaling is a type of buying houses with no money. If you learn how to do it, you could very well have no money involved in that transaction. And then we'll talk about this about what does no money down or no money mean.
Yeah.
But quite honestly, private money, hard money, that's a type of no money down when you talk about none of your money. Partnerships, house hacking, real estate crowdfunding, those are all different ways that you can buy houses with little to no money out of your pocket.
Hello, everyone. I'm Tim Jones with foreclosure.com. Today, I'm interviewing Tim Cook to learn how to buy houses without using your own money. Mr. Cook, welcome back to the TNT show.
Thank you, sir. Happy to be here.
Oh,
Excited to be here.
awesome. Well, I'm looking forward to diving in with you. So Tim has over 25 years of experience, and you can find him teaching these valuable lessons at the West DFW RIA Group based in Dallas and Fort Worth, Texas. So let's dive in. So what are the primary strategies investors use to acquire houses without using their own funds?
So there's a lot of different strategies that can be used. Some are more common than others because people just haven't learned them all.
Mhm.
A couple of them that people really think about frequently are seller financing, where your seller acts as the bank and holds the note, kind of like Bank of America would for you if you bought a house with a mortgage on it. They would hold a note and a lien against the property. So that's a pretty common strategy. Subject to buying houses subject to is another way
Mm.
of buying houses with little to no money. And that's a process of being able to step in and take over the payments, take ownership of the home and take over those payments. And the seller can move on and not have to worry about that debt. There are a lot of details about that. We'll talk more about that here in a little bit.
Yeah.
But wholesaling is a type of buying houses with no money. If you learn how to do it, you could very well have no money involved in that transaction. And then the we'll talk about this about what does no money down or no money mean.
Yeah.
But quite honestly, private money, hard money, that's a type of no money down when you talk about none of your money. Partnerships, house hacking, real estate crowdfunding, those are all different ways that you can buy houses with little to no money out of your pocket.
Wow. Yeah, that's definitely a good amount of strategies there. Um, so I guess let's break it down a little bit further. When people hear buy a house with no money down, what does that actually mean? I mean, what are the biggest misconceptions about it?
Yeah, well, let's say what it doesn't mean first.
Okay.
Okay. It doesn't mean that there's no cost involved.
Okay. Yep.
Okay.
There you
When
go.
we talk about no money down, we're really talking about it could be no money down at all, but many times it means none of your money, depending on who you've learned the strategy from and stuff, and what your creative deal making ideas are and capabilities are. You may be able to structure that deal with none of your money, but maybe bring in a private money partner or something like that. Okay.
Okay.
But there are no money down opportunities. I've done them.
Hmm.
But you're still going to have the cost side of it. You're still going to have closing costs. If there's a realtor involved, commissions, typically you don't as an investor, but you may. So yeah, that's what it really means is none of your money. Could be zero money, period,
Mhm.
but none of your money if you know how to structure that deal.
Great. Well, let's learn a little bit more about what are the biggest risk or potentially ethical pitfalls sellers and investors face when structuring no money down deals.
So the first thing is you got a misconceptions and risk for both the seller and the buyer, right?
Hmm.
So if you're doing an owner finance deal with the seller, when the seller is taking that note, holding that note, then they're at risk because you could default. Okay. So
Yep.
you um, you may default, and that means they're going to have to know how to take action and depending on what you've done, maybe file a foreclosure. So in the case of a selling the house subject to scenario where the seller has sold you the house, deeded the property to you, and the buyer is taking over those payments, now the seller could be at risk of you damaging their credit.
Hmm.
Okay.
Yeah.
So if I bought your house, you deeded me your house, and I'm taking over those payments that are established with a mortgage company, and if I start off making those payments and at some point in the future miss payments, now I could be impacting your credit.
Hmm.
So that's big risk. Okay. And if it really got bad, and let's say my tenants, or if I even moved into the house and they destroy the house, now, depending on what kind of agreement you've made with the seller may be responsible for to maintain that house, go back in there and fix it all up. So it just depends. The risk to the buyer. So as a buyer, depending on what that buyer is going to do, if the market changes and it crashes, we were kind of talking about that earlier, right?
Yeah.
And if the buyer buys the house at one rate and based on his income and stuff, and then the market crashes, he's at risk for being able to not make those payments.
Yeah.
It could be underwater in some
Hmm.
cases. So, if he buys that house with a creative financing deal, but really needs to sell it now because of whatever reason, right? Whether it's divorce or job transfer or job loss, market crash. If he can't sell it, now he's got a big problem, right?
Hmm.
So that could be a big risk to a buyer. Yeah, just there could be any number of scenarios there that could be a risk to either party.
Yeah. No, those are definitely things you want to think about before getting into any type of transaction, right? Some
And
I've
there's
heard.
there's there's some ethical pitfalls here too. I mean, unfortunately we have investors out there that don't do the right thing.
Hmm.
They go after um, people that are in dire straits and need a solution, but whether it's intentional or they're just not educated well enough, they don't explain, for example, on subject to kind of deal or owner finance, either one, they don't explain the full process to the seller, and they walk away thinking, rethinking it, sometime down the road and realize that, hey, we don't know what to do if the buyer defaults.
Wow.
How come if it's a subject to deal, how come our mortgage didn't get paid off?
Yeah.
And if the buyer doesn't explain that process, they're starting to question that transaction, right? So
Definitely.
that could be, and I see it frequently in our market where they don't explain to the seller what they're getting into. Very, very important. That's one reason why I attribute my successes to subject to deals, creative finance deals for the last 25 years is because I am very, very detailed with my seller, disclosing everything. And my title company has told me numerous times that I've never had a seller back out at the closing table,
Hmm.
and they always know what they're getting into. They don't have a million questions
Yeah.
for the title company, which is not the title company's job, right? It's my
Hmm.
job to
Hmm.
answer their questions.
Yeah.
So I think it's because I, really am detailed in disclosing and documenting what I disclose and how that transaction works.
Yeah, no, that makes a lot of sense. Communicating and being transparent with the seller. So that's a great way to mitigate potential risk. Is there anything you do to to make sure that they're aware of all of these potential pitfalls or is it just having the detailed conversation and kind of going further and
I have, I have written disclosures,
okay.
as to what we're doing, what we're not doing.
Yep.
Again, that to me, that's just as important
Hmm.
as what we are doing is what we're not doing. And what we're not doing is we're not going in and paying off your mortgage today. It's not going to a zero balance like you might, like most transactions. So that we have to make sure we explain that and they initial it so that they can't say that they weren't told.
Yeah. And then at the same time, these people are usually in some sort of economic downfall or they're having some issues paying their mortgage. So you're helping them, but you still have to be extremely upfront with saying something along
Right.
those lines because they might think they're just getting out of the entire deal where reality, they could be, the house could be on their credit for multiple years after the transaction's complete, correct?
Until the day comes that I pay off their mortgage, we are in control of their credit.
Wow. That
We can make it go up, we can make it go down. So, but the good thing to them is, especially for those sellers that are going through some financial distress for whatever reason, job loss, uh, loss of a family member, whatever it is, and they've damaged their credit, and we're able to step in and prevent the foreclosure. The good thing for them is as soon as we start making payments on time again, we're going to start improving their credit score again.
that's
So that's a big perk, a big plus to the seller in these scenarios.
that's a key from my perspective is as to why they would do it as well, you know.
And
Okay, so
for a couple ways that both the seller and the buyer can mitigate some of these risks, Tim, is that, one, it's a secure transaction. So, when we close on those deals, whether it's a straight seller financing or a subject to deal, we're always closing at a title company and they are filing that deed. So, that goes on public records, just what we did. Okay.
yeah.
Both parties, buyers and sellers, need to do their due diligence. They need to make sure that they have researched everybody that's involved and understand it. They can talk to the title company. They can go do Google reviews and Better Business Bureau reviews, which unfortunately I see a lot of newer investors today that don't start building their reputation. And that's so important to start that from day one with that very first deal when you're first getting started in the business, is start working on your reputation, and get those testimonials and reviews.
Hmm.
Make sure that they use legal professionals. Don't do tabletop closings. Don't, go use your buddy Joe next door to write out a legal agreement. You're best to use the state agreements whenever you can, when you're doing these types of transactions. And you want to make sure that you have all the documentation you need as the buyer in order to go manage the subject to type transaction. So there's a lot to do with this type of transaction. This is not the type of transaction for someone that's lazy and doesn't like details.
Hmm.
Very, very important that they learn it and go through and document everything like they should to help
That's
mitigate the risk.
Yeah, no, it's great information. Again, what not to do sometimes is just as important as what to do and what
Yep.
you're gonna do, right? Um, so in today's market with higher interest rates and kind of economic uncertainty with the market, what does creative financing, when does creative financing make sense? I know you broke it down a little bit just now, but can you elaborate a little bit further and you know when it does and maybe doesn't make sense?
Yep. So, the creative finance strategies um, really come into play when interest rates are very high or a a buyer, maybe even a seller, is in a situation where they just can't go to the bank and get a loan.
Mm,
Okay. So that's when you start seeing a lot of owner finance type transactions. Um, a business owner, if it's a new business and you are haven't done 2 years tax returns yet to be able to show what your income is, might be a great business, great people, but they have to be able to prove income in order for them to qualify for a
mm,
new mortgage.
mm,
So they can buy with owner finance at that point and be able to use it as a stepping stone. So get out of the rental market into ownership and then work on credit and refinancing into a lower interest rate. You're always going to pay more interest in a creative finance or owner finance type scenario
mm.
because you're offering a house with terms that someone can buy that they couldn't otherwise buy. They could not go to the bank and buy that house for whatever reason it is. Okay.
Mm.
Um, but we put them in the ownership position by buying with owner finance, and then they can work on getting prepared to refinance at some point in the future. Okay. So that is a very good scenario for um, when to use it. The the people that or the time when you shouldn't use it is going to be scenarios where the buyer is already struggling to meet their financial responsibilities.
Hmm.
And, putting them into an owner finance scenario is not normally a cheap endeavor because they're going to have to come up with a down payment and they're going to pay a higher interest rate.
Yeah.
Okay. So if I bought the house creatively, whether it's a straight seller finance or a subject to deal, and now I'm turning around and I'm going to sell it with owner finance, it would be best for me to make sure that I do my due diligence on that buyer and that I'm comfortable with their ability to pay,
Hmm.
right? Because if they can't pay, that means they're defaulting on my agreement with them, but then that creates a problem with my taking care of the seller and making the payments that I agreed to, right?
Yeah.
So it behooves me to make sure I do my due diligence thoroughly so that I know and they show proof that they can afford to make payments on that house. Let's face it, when you sell creatively, it's a big risk.
Hmm.
And it's a big risk because they could file bankruptcy, right?
Yeah.
So if you own a house free and clear, them filing bankruptcy is not as big of a risk because you don't have an outgoing debt to have to pay. But if you've bought it creatively from someone
Hmm.
and now your buyer, I turn around and I sell it to a buyer and they default and they file bankruptcy, that becomes a big problem for me being able to protect my sellers.
Yeah.
So it's a very, very big risk. And even some of the best buyers with that's why you always want to get a big down payment.
Mm.
This is not something you want to do with 3 or 5%. You want to get, 20, 25% or more as a down payment.
Mm.
That gives you a little bit better feeling that they have good income, right? But there's no such thing as a guarantee that they'll never default.
Yeah.
I've been there, done that.
I can imagine. That does not sound that does not sound fun. That sounds like
Yeah,
part of real estate investing where people don't like to talk about because it's
that's right. And I've been very fortunate though. In 25 years, I've only had a handful or less of foreclosures and bankruptcies that I've had to deal with. And I really attribute that to being fussy, being very thorough in the due diligence process, pre-screening buyers to make sure that they are qualified and capable. I don't just put somebody in my houses just because they talk a good story.
Yeah.
And that's something that the young generation don't take the time to think about or even learn about. And that's one of the big benefits to getting educated. Come to a RIA group somewhere in your area and like ours in the Fort Worth area and learn that process.
No, that's very important, and that kind of is a perfect lead to my next question, which for someone who's interested in learning these strategies the right way, because I feel like we just touched the surface of these topics, what steps should they take before attempting their first creative deal?
Do you mind if before I answer that question, do you mind if I cover one more thing?
Please, please.
Um, Back on the creative financing and when it makes sense.
Yeah.
So, so let's take the scenario where we're offering creative financing, but maybe we're having a difficult time finding the qualified buyer, or we find a interested party that maybe just doesn't have a big enough down payment. They meet all the other criteria, but for me, remember, I have to have a big down payment to help mitigate my risk. So if they don't have it, but they have good income, they can afford a monthly payment, maybe I put them in there on a rent to own type scenario.
Wow. Yeah.
So, so in that case, they don't have to have the big down payment. They
Yeah.
do still have to have a rental deposit.
Mm.
And my conversation is going to be kind of like treating them as a buyer. We want them to take care of the home and show us that they really do want to purchase the home. And a big part of this is going to be making payments on time. So we're going to have solid payment history, and they're going to have to start building the deposit to be bigger so that when they have enough deposit built up, we can convert all that to a down payment and be able to switch to owner finance so they can then own it instead of rent it. Does that
Wow.
make sense?
It does. It's complicated. And rent to own, basically a lease option agreement.
Nope,
No.
nope. In
Okay.
Texas, we have some new laws here. Some states they can do a lease option,
Okay.
but in Texas, that's a little bit harder. It's not illegal, but it's much harder than it used to be.
Okay.
And it's very easy to default on it.
Okay.
So we don't do that. We just do a rent agreement, and we have a deposit just like any other time. And they can contribute additional deposit, not down payment, deposit money, at which time that can be converted to a purchase if they are ready, when they get ready.
When they're ready.
Okay.
So
In
if
the
the
meantime, it's a straight rental agreement.
oh wow. Okay. So is it a rent to own agreement or is it
Yes.
rental? Okay.
Yes.
So it's a rent
It's
to
a
own agreement.
rent to own.
So
It's given
essentially
them first right of refusal basically
first right of refusal. Okay,
to
that's the word.
purchase the house.
So for example, if the rent is normally going market price roughly $2,000, they would pay an additional 200, $500 that would go down towards a bucket like that would essentially potentially
Yep.
go to the deposit for buying the house.
Yep. And we're going to have a discussion about how much they can afford each month. They're never going to get there if it's $10 one month, 25 the next,
Yeah,
that kind
yeah,
of thing.
yeah, yeah.
They have to be able to afford, 300, 500, 1,000, a month because you're going to do the math first. You don't want to be doing this rental agreement for the next 50 years.
Yeah.
you want to be able to sell the house, and you got to be
Yeah.
convinced that they want to buy the house in
Yeah.
order for this type of arrangement to work.
And
So,
that's very creative and very great information. I can definitely see how that scenario can work out for both the buyer and the seller and the renter, potential buyer. So,
yep. So if you have no more questions there, then I'll be happy to answer your last question
yeah,
there.
yes. Would you like me to repeat it or?
Yeah, you can if you want.
Yeah. So for someone interested in learning these strategies, the right way, what's the steps should they take before attempting their first creative deal?
Well, in my opinion, the first step is they should go join their local RIA group.
Yep.
Wherever they're at, if you're in Dallas Fort Worth, the West DFW REI Group is the most active group in North Texas. And all you have to do is go to our events calendar and see that, we hold a lot of training. And that's, a big part of what a RIA group does is training. And but it's also a community. It's a place where you can go get help. You can ask questions, not worry about somebody trying to steal your deal, and get straight answers. And in many cases, get some mentoring or a partner that can help you through that first deal.
Yeah.
Um, Make sure you pick a partner that's done what you want to do. Don't find a partner that says, yeah, he'll go do subject to deal with you when he's nothing but a wholesaler.
Mm.
You have to find somebody that's experienced in doing what you are trying to do. And then, if you find that group, then you might want to inquire about any kind of workshops that they hold for more in-depth training, and then also mentoring. Find out what mentors they have in the group, and do they have the skill set to get you where you want to go. So most RIA groups you'll find that will have that.
Yeah.
I have a big list of RIA group leaders across the country. If anybody ever asked him,
Okay.
I may be able to point them to somebody that they can trust. Um,
Perfect.
but we do have a very active group. We have a ton of members benefits. It's right on the homepage. There's a big button there to take a look at member benefits, but you'll see that we offer a tremendous value for the small investment that you have.
No, that's great. No, and having a mentor, I would think is really important, especially in the market the last couple of years, because it's been a lot of ups and downs.
Yep,
So to navigate this, you definitely want someone who's had experience not only with the transaction, but also probably the market cycles itself, because, from the more I learn about real estate, it is cyclical, and as far as, you know,
absolutely.
booms and corrections. So,
And people ask me all the time when the best time is to get into real estate.
mhm.
What's the answer?
Yesterday.
Yesterday.
Yeah.
Now.
Now, yeah.
It's always the best time to get in.
Yeah.
Okay. And why is that? Well, it's because for one, if you don't get in, you're never going to have a chance. If that once that deal passes, you've missed it. You can't go back. But the thing about the market is you just have to learn to adjust with the market. Our market is a lot different now than it was in the late 2000s, when we had tons of foreclosures. I was buying those subject to deals like crazy.
Yeah.
And that's just not the market we're in today. So we
Mm.
adjust and we do other things. And that's what another benefit is of the RIA group is they help guide you through what the market changes are and what's working now and what's not. But it's always the best time to get into business. You just have to learn it the right way. Oh, by the way, uh, back to the what's not the best thing to do,
Hmm.
like we were talking about earlier, what not to do. Um, One of the things you don't want to do is just pick up a video on YouTube or on the internet somewhere and just think that person is a guru and just start following them without knowing what state they're in, what kind of experience they have.
Yeah.
Just because they're teaching you some wholesale strategy, well, guess what? Wholesaling is not legal in 19 states today.
Yeah. Yeah.
So the laws change, and you have to make sure that you learn from the gurus in your market. That's always the best is pick up the training from somebody in the same market you're in, doing deals that you're in that same area, so that you know and at least you know that that part of the information is correct. Whether they're teaching quality stuff straight up with you is a different story.
It's
So
great information. And it kind of leads into my next thought and question, which, everywhere I look online, specifically, I hear about these subject to transactions. So, what are some of the biggest mistakes new investors make when using subject to strategy?
not learning it.
Okay, yeah, that makes sense.
No,
The-
I, I'm serious. I mean,
Okay.
I think that is the biggest mistake. And if it's not that they didn't learn it, it's because they're being misleading and deceiving.
Mm,
There is a lot of moving parts to a subject to transaction. And many times, because there are so many moving parts and the seller needs to understand those, many times the investor fails to tell them about maybe the due on sale clause, about how the mortgage company could call the loan due. And if new investor doesn't have a plan and doesn't know how to explain the due on sale clause, then that seller, is going to be surprised if there's ever that question. So, and in a good case and point here is that of being deceiving, they may not tell the lender or may not tell the seller that about the due on sale clause. And if the seller ever calls the mortgage company and says, "Hey, I sold my house 6 months ago. Why is it still showing on my credit?"
mm,
You know, and it may be because either the investor didn't tell them, the investor may not know, but also it could be a case where the seller didn't listen or they forgot all of a sudden.
mm, yeah.
This is why we've learned to have detailed disclosures where they read an initial that they've
Mm,
read it and they understand it.
yeah.
But a lot of this stuff isn't taught in the guru classes.
No.
And my every time I teach my subject to workshop, it gets better and better and better because of the things I learned, the things, whether it was to me personally or I learned from somebody else. But that workshop just gets better and better. And that's always my goal is to help new investors learn it the right way. It's so important, and honestly, it's so easy for a seller to turn around and write bad stuff about you and kill your reputation in a heartbeat nowadays, right?
Yeah.
On the internet, couple minutes, that's all it takes.
I get it.
So and it takes a long time to overcome that if it ever happens, whether it's intentional or by accident. Um, it takes a long time to get over that. So these young investors coming out here, here's another big problem that I see that shouldn't be happening when you talk about big mistakes is investors going out and putting subject to deals under contract and then assigning them like a wholesale deal. And
Okay. That's probably
so
why it's illegal in wholesaling is illegal in Texas.
yeah, well, it's not Texas, it's illegal in
Oh, okay.
other states.
Other states. Okay.
But here's the scenario. Let's say I put your house under contract with you as a subject to deal,
Okay.
and you and I are going to have a lot of conversation about it. Hopefully, a lot of conversation, depending on the level of knowledge of the new investor. Maybe not enough conversation, but let's say I didn't give you all the details of how subject to works, or let's say I promised you I'm going to pay your loan off in 12 months. And then I go assign my contract to another investor buyer. When he buys that house, does he know what you and I talked about? I could have promised you the world about what I was going to do, when it was going to be paid off, and so forth. And that new buyer may not know any of that. That
Mm,
new buyer may not know what your concerns are. What happens if I get run over? How does my mortgage get paid off? Who's making payments? When is it going to get paid off? You
yeah.
know, there's a lot of questions like that that sellers need to understand. And if I go and pass it off to an investor that's brand new in the business and he doesn't know what he's doing, whether he rents it out to someone and they destroy the house, or he sells it to an owner finance buyer that defaults and goes into bankruptcy. And if this young kid that's trying to learn how to be an investor, if he can't afford to make the payments on your mortgage
Yeah.
because he's brand new in the business, doesn't have a job, all he is doing is trying to flip houses, sell houses in different ways, that means you got a problem.
Yeah.
So I see that happening a lot here in our area,
Interesting.
and it really concerns me because, I even tested this theory a couple of times. I'd see somebody trying to assign a sub-2 deal, and I thought the prices were good and stuff. So I said, okay, I'm interested in this deal, but you and I need to go sit down and talk to the seller first. I need to know what they've been told, what their expectations are, and I need to be able to explain to them what I do and what my intent would be to take care of them. And these new investors absolutely will not ever let me talk to the seller
Hmm.
because they're afraid I'm going to take the deal and they're going to lose out. Does that make sense?
It does.
So it's a big problem. They won't let you talk to them beforehand. And one of them says, "Well, I want a $10,000 non-refundable earnest money deposit." Well, why would I give you a non-refundable if I get over there and talk to the seller and find out that you told them something that was inaccurate with what I do,
Yeah.
and I can't meet that requirement? So it'd be crazy for me to give you a non-refundable. Crazy,
Yeah. No,
stupid.
that's
So,
it's sad that that happens more often than.
yep. And it's just that's why I've been running the West DFW RIA group and teaching strategies the right way for 16 years.
Hmm.
Tim, 16 years. My hair was your color.
Yeah.
My beard too.
Yeah, I'm catching up soon, buddy, with these kids, I'll tell you. Oh, this is great information. And I think we're about out of time. I definitely want to dive into listing types and I have more questions. So hopefully we can continue the TNT show at another date. But before we jump out of here, what are you currently seeing in the market and where do you really think the market's heading in 2026? You know,
Well, I'm not a big monitor watcher, a forecaster. I kind of see what's going on around the area where I am working at the time, and watching the days on market for those listings, And I'm not a realtor in full disclosure. Am not a realtor. Haven't been in 25 years. So, and you don't have to be, as long as you learn it the right way, you don't have to have a license. So, and but I am seeing that the market is kind of softened. The prices are not climbing like they used to be. I mean, there was a time here in Dallas Fort Worth that people were getting 50 and $100,000 over asking price in order to buy a house.
yeah.
And I think those times are gonna come back to bite them because if they ever have a life event, such as a death in the family or job transfer, anytime soon, there's no way they're ever going to get their money back out of that house. So they're going to end up having to bring money to the closing table or having to rent the house forever, which many homeowners do. They despise the idea of renting their house.
Mm,
But they don't have much choice if they don't want to lose money.
yeah.
But I do see our market has softened. You know, our prices in some, and it's kind of funny. It's very focused on neighborhoods. You know,
Yeah.
we have some neighborhoods that, list a house and it's gone very quickly. You have other neighborhoods where you list a house and it sits there over and over, day after day after day. Right now we are at and I see the total number of inventory homes going up. We are at 3.6 months of inventory now here in the DFW area.
Yeah.
And back during the peak, we were down to days
Yeah.
of inventory. So
Wow.
it's really changed a lot for us here. And it's taken about 33 days to close, and the average days on market here is 76.
Wow.
And I'm saying this from the Dallas Fort Worth market. There's other parts of the country, they're all different.
Yeah.
But for anybody trying to sell quickly, it's right now it's taken on average to list and sell a house 109 days. And for some people, that's just not fast enough.
Yeah.
So that's
I get
where
it.
investors come in, and because most investors can close in 7 to 10 days, sometimes sooner, depends on the house. Sometimes longer if there's a bunch of liens on the house or there's multiple errors in a probate scenario, So, um, but I think now with the announcement of the interest rates dropping a little bit here in the last couple of days, I think that's going to help. I did see that last month they had an increase of new listings. It wasn't a big jump, but it's so, you know, up and down, up and down, up and
Yeah.
down. And, we as investors, we don't normally pay much attention to what the realtors are doing. But home sellers, I'm starting to see that some of the prices are coming down. I there for the longest time, I saw a lot of houses like sheds, the size of a large shed for 200, 250, $300,000. I mean, just small
Yeah.
properties.
No.
I just saw one yesterday, a brick 321 of 1,000 square feet for 140. That's the lowest price I've seen on a brick home in a long time.
Wow.
Unfortunately, it needs a full rehab, but still, that's better than paying 300 and having to do rehab.
Yeah. Yeah.
And of course, that's, in a um, not an up and coming neighborhood here, but different parts of the country, like down where you're at, you'd probably never get to that 1,000 square foot house for 140, 125.
No, no. I mean, honestly, I was looking at a house in what I would consider, not a very nice part of town, right?
Yep,
And you just properties that were going for 70,000 in 2005, 6 are now on the market for 325,000. And it's 1,000 square foot little
yep.
one bedroom in a very not safe area. So it down here, it's crazy. But if you go across the state, to kind of, if you look in Port Charlotte, they're I think they're their market is performing. I think was the worst market in 2025 as far as year over year depreciation in home values.
I
And it's
know
happening
Cape
quickly.
Coral is bad.
Cape Coral, yeah. Port Charlotte, Cape Coral,
Yeah,
that whole little block. I mean, those areas were affected by back-to-back hurricanes, so that definitely had something to do with it. But it just shows how quickly markets can shift. And I definitely remember down here in 2008, 2009, when everybody was saying when the market just kind of shifted very fast and properties dropped, 30, 40%. within a
Yeah.
2 year period. So
I have a friend in Cape Coral, and he's telling me that, every other house has got a for sale sign on it.
yeah, it's interesting. There was a article that I read not too long ago and had a photo of the Cape Coral market from 2008, and it was a unique photo because it was boat tours of foreclosures, right? So you're seeing all these tours, which is, when you say boat tour, uh, the intercoastal or ocean view, you would think luxury in some way. So it's interesting to see that history repeats itself sometimes.
Yep. Yep.
Well, Tim, thank you for your time and energy. I greatly appreciate this information.
I hope it's helpful.
It is, and I'm excited to release our article that goes in a little bit further depth. So I'll hopefully we'll get this all released next week, and I hope you have a great weekend. And if you made it this far, I hope you please like and subscribe to our YouTube channel. It helps new real estate investors and buyers learn more tricks and tips like we learned today. And don't forget to turn on our free foreclosure alerts on foreclosure.com. Until next time, I'm Tim Jones, and thank you for watching.